New York Attorney General's office taking another shot at high-frequency trading. Just kills me. Its latest target, Credit Suisse. Our very own Fox Business senior correspondent Charlie Gasparino has all the details on this. Nothing makes my blood boil more, Charlie. Go ahead.
Well, we should point out that the New York AG, Eric Schneiderman, is wrapping up a case against Credit Suisse over dark pool abuses. Now, here's what they do. Credit Suisse runs one of the biggest dark pools. What they're looking at, does that dark pool give the high-frequency traders, the guys that your friend Brad Katsuyama hates so much, Anthony, does those dark pools give the high-frequency traders an unfair advantage over other traders? At least that's the sort of broad outlines of the case.
Well, they give them an advantage.
But just let me just finish these headlines and we'll bat it around. So here's what we know. They're looking at Credit Suisse. They're wrapping up a case against Credit Suisse. We should point out that the CEO of Credit Suisse is on the board of 21st Century Fox, the parent company of us. That just shows you we are fair and balanced and go after anybody in the world. And the case is being wrapped up. When is it coming? I hear in a couple weeks, and I hear it's going to mirror the case that was brought against Barclays involving something called latency arbitrage. Other players do not have access to fast information and fast trading. The high-frequency traders do. Because of that, they can front-run the orders of the other traders. We should point out, since Michael Lewis wrote the book Flash Boys, a lot of attention has been put on high-frequency trading, its alleged evils. We should also point out that regulators have not filed a single case against a major high-frequency trading firm. Not one single case.
Thank you.
But they've gone after. And I think this is where Eric Schneiderman deserves a tip of the hat. He's gone after the problems in the dark pools. What is a dark pool? It's a private exchange. You don't necessarily have to trade on the NASDAQ and the New York Stock Exchange, which has a lot of disclosure. You could trade on these private exchanges. And I'll tell you, this is some of the problems with market structure right now. Those private exchanges are like the Wild West. In those private exchanges, apparently, according to Schneiderman, you could get high-frequency traders, because of the lack of disclosure, can game the system.
Is Credit Suisse commenting on this?
We should point out Credit Suisse refused to deny this. Now, I spent all day yesterday going through this story point by point with them. They chose not to comment. I told them that would be taken as do not deny. The New York Attorney General's office has no comment. We should point out also Barclays, the case against Barclays was brought a year ago. So this is 1 year since Schneiderman brought that case. He's gone at this pretty methodically. He's always said he was going to do it methodically. 1 year, basically 1 year to the day, they're likely to bring another case, and I hear it could come within the weeks.
Well, I mean, I have a broad comment is that it's not illegal, and so So you have to figure out now if you're going to change
high-frequency
the policy.
High-frequency trading is not illegal.
If you notice what they're doing with these cases, is they're saying, okay, you are a big bank. Credit Suisse operates, based on most measurements, the largest dark pool. You're one of these banks that operate a dark pool. You don't disclose everything to your investors, and guess what? We're going to ding you for that lack of disclosure.
Okay, so
that's essentially where they're going.
So that may be a regulatory issue, but the bigger issue here is whether they're going to change the policy. And if they do change the policy, they can't make things illegal retroactively.
Here's what I think they're going to do.
That's the big problem.
Here's what they're going to put so much pressure on the dark pools, because that's really, if you talk about the marginal HFT abuse, it does occur, or pernicious activities. I'm not even saying it's abuse. I don't really go there. But if you look at those activities, if you limit the amount of dark pools, if you start putting people in less and less dark pools, or dark pools can't give the advantage to the high frequency trading, well, guess what? There'll be less dark pools. There'll be less market fragmentation, fewer markets, maybe not a flash crash in a few years. Remember, market fragmentation was the reason behind the flash.
I am always the first person to point out that high-frequency trading has improved the overall environment for the retail investor. It increased the liquidity in the markets. It increased the price discovery.
See, I agree with you, but Brad Katsuyama would be on this panel.
Oh, God, he is such a phony.
No, he's not a phony. He's not a phony.
Oh,
he's not a phony. He's an advocate of a different point of view.
Yeah,
he would come in and say those guys rip off pension funds and mutual funds, which rip off.
Where did he work, and how long did he work there? And
he worked there at RBS a long time.
All right.
How long did you work on Wall Street?
For many years, actually.
I bet you he worked longer than
I'll challenge him any day. He's never agreed to come on directly with me, ever.
Come on. He comes on every show.
Charlie Gasparino, thank you for your exclusive reporting on the Fox Business Network. I'll take you on that argument any day, any time.
He's worked longer than you on Wall Street.
President Obama.
That means anything. It doesn't mean anything.
Excuse me, and what did he do? Nobody's ever told me what has he accomplished. Why isn't he on Wall Street anymore? Nobody wanted him.
He started his own exchange.
He was a failure. President Obama.